I am back. I am alive, and I did not blow up my portfolio. Thank God. We had some scary days, no doubt. I was back holding Meta, and it was a very scary ride. But we got out of Meta at earnings. Today, I want to go over basically the state of the market and what my shopping list is, and what stocks I'm looking at and why I'm looking at them, because there are a lot of stocks down 20+%. I know the market's only down like 3% or so, but there's a lot of stocks down, and there's some decent buying opportunities out there right now, right? It might not be on your favorite stock, but there are stocks out there. But let me get into what these we go over. Just look at the last year, right? So we got up to 200. I fell all the way down to 106. I was like, fuck. And I was like, well, I'm not going to panic sell, dude. I absolutely refuse to panic sell a great company like Meta. And the reason I had these big swings because I was in margin as well, holding Meta. And got back up to 150, came back down to 115. It was a very scary ride, not going to lie to you. And then we crushed earnings, and we got out at 175. So that is pretty much, and we're at 171 now because, as you can see, I've been buying the dip. I got 3 shares of SoFi. 300 shares of SoFi. This is one of my favorite companies ever. I believe in this company. I love it. And I really want to expand this to 20K plus, possibly even 40. But I'm starting low because I don't know if this is the bottom, right? Nobody knows if this is the bottom. This is definitely a dead cat bounce, but if it's any more than that, we don't know yet. So I'm nibbling in there. I like SoFi at these prices, but the cheap can always get cheaper. So that is why I'm not going all in, obviously, right? I went all in on Meta too early. I think I was buying Meta at like 650, 630, and then Meta hit 580. So and I didn't have any cash left to buy Meta, so I don't want to repeat that mistake. The cheap can always get cheaper, right? Like, for instance, Hood, I started buying at 100. Right now, my average cost is 96, and I have 80 shares for 6,600. Still small portion of my portfolio. I think maybe like 4%. I'm still majority cash because just in case we dip. If you guys want to see, I have 115,000 in cash right now. So I'm only invested roughly $55,000, and all these puts are about to expire today. They already have expired because market just closed 10 minutes ago. So I'm going to collect 100% of this premium, 100% of this premium, 100% of this premium, and 100% of this premium. So that is nice. That should give my account another like $100 boost or whatever. But I also, Microsoft, man, dude, let me tell y'all about Microsoft. So I started buying this a little early too. Started buying around, I think, 450 or 460. And I've just been slowly averaging in, man. Just been buying shares, like a little couple here and there, whatever. Just been slowly adding to my position. This is by far my biggest position because I'm only 55K invested and 30 of it's in Microsoft. And we are down 7.5% on the position. But it is something I would like to build to 100 shares. And then once we recover, then start to trim out. But I do think Microsoft is one of my favorite stocks right now, along with Netflix. Netflix is down 40% from highs. We hit 134, and now we're sitting at 82. And we've been sitting at 82 for, a nice little bit, right? We hit 83 back in January 21. We've been kind of holding it a little bit. I feel like we've kind of came down to 80 and bounced off of it a few times already. So 10K and there, we're down only 3% so far. Not terrible. I think this is a great place to start nibbling in some shares. And I got 4 shares of Meta. I just bought back in at 660, and then I got 3 shares of Amazon at 199, or basically 200, I think. So that's all I'm holding right now. I'm looking to build the SoFi position out a lot more, and possibly Amazon to Meta. The real reason the market's selling off is, it's basically just this, right? All the Mag 7 companies are spending a shit ton in CapEx. Amazon just reported they're growing roughly $200 billion in CapEx for 2026. That's insane. And however, I do think Amazon is in the best place to benefit from AI, right? Because they can hire robots in all their warehouses, which means they can get rid of basically 1 million employees, and they'll have robots doing all the labor for them. And once the robots are paid off, they're just basically have free workers. So, and also they have the Prime delivery service, and self-driving cars are coming out soon. Well, they kind of are already out. But if Amazon could take over that would really hurt UPS, FedEx, and the post office, because they help Amazon right now deliver some of their packages, because the Prime delivery vehicles are not everywhere. They're in like the bigger cities. But like where I was from, they didn't have that. The post office would always deliver my Amazon packages, and they still do. So if Amazon can take over their own deliveries and get robotics in the warehouses, I think that is very big for Amazon. But these other companies, I just don't understand how they're going to turn it into revenue. May, if you guys do understand, leave a comment. And I'm open ears, open-minded. But look at Google, 180, Meta, 120 to 130, Microsoft, 114. It's crazy. Apple's the only one not overdoing it, right? That's why Apple stock's at a pretty much damn near its all-time highs. They're only spending $14 billion. So if this is a bubble, and if they cannot generate any revenue from all this spending, Apple's going to take the least hit, because they're hardly spending at all, compared to the others. That's why Microsoft's down, Meta's down, Google's down, Amazon's down, just because of this. And that's why Apple's probably green. But let me get into the stocks, and I like to look at PE ratios and earnings per share growth rates personally, right? All right, so June 2026, you'll be looking at 22.5% growth at a PE of 23.5. Microsoft at a 23.5 is pretty fair, pretty good compared to its average, all right? And when you compare the year-over-year growth of 22.6% and the PE of 23.5, you almost get a PEG ratio of 1. PEG is price to earnings growth. Hold on. Price to earnings ratio over EPS growth. PEG. Price earnings growth. Price to earnings over growth. Whatever. Something like that. But this is almost a 1, right? Because they're almost even. So anything around a 1 PEG is very good. And if the growth is more than the PE, if the PE is lower than the growth, that means you're at a less than a 1 PEG. You're at 0.9, 0.8, which is even better, right? When it comes to valuations. And that's my favorite thing to look at, right? So Microsoft is trading almost at a 1 PEG, probably 1.1 or something like that, which is very good for such a massive company. I think they're trading at around $3 trillion right now. They've already lost $1 trillion in market cap, which is pretty crazy. But I'm going to go over 4 other companies. I'm going to show you the comparisons, okay? So they're trading around a 1 PEG. Let's go to Netflix. They are also trading around a 1 PEG. Probably 1.2 or something. But they're growing 23%, trading at 25. And then next year, they're going to be growing 22%, and they're going to be trading at a 2027 PE of 21. So that is amazing. This is another reason why I'm buying a ton of Netflix right now, is they're trading at very attractive levels. All right, Netflix usually trades at 40, 50 PE, and now it's 25. 2027 will be 21. So very good growth and very reasonable, fair price. All right. Now we go to Apple. You can clearly see this stock is, in my opinion, I would say overvalued, right? You're only growing 13.5%. You're not trading at a 13 PE. You're trading at a 32 PE. So this is over a 2 peg, almost a 2.5 peg ratio, which is no bueno. And then here, your growth slowed down to single digits, and you're trading at a 3 peg for 2027. So personally, I would not be looking at Apple right now. I just feel like there's better deals out there. Apple's a great company. I love it. Don't love the price. And I don't really love the growth, especially when you got Netflix growing 20% and you got Microsoft growing 20%. I don't like 13 and 9. Not really attractive. And then we got my baby, SoFi. Strong believer. 54% growth this year, 2026. Trading at a 32. I mean, you're looking at 0.6 peg ratio. That's amazing. When the growth is higher than the PE, you are looking at a phenomenal deal. And in my opinion, that's what we're looking at right now. Phenomenal deal. 2027, 33, almost 34% growth, trading at a 4P of 24. Still under a 1 peg ratio. So honestly, SoFi is a stellar option in my opinion. I do recall during the 2022 bear market, they were still growing their revenues. I don't think they were profitable yet, but they were still growing during a bear market when everyone else was revising their numbers down. They did not. They kind of kept theirs the same. They might have revised slightly down, but they were still growing year over year. So this business is not really one to get affected by bear markets. And we're in an interest rate cutting environment, so I think their loan segments should be picking up pretty soon. But never mind. So all this just expired. That's sweet. But let's look at the charts. Let me show you exactly why. All right. So we're at Microsoft, $400. There was a massive gap from earnings back in around May 1st, and Microsoft just filled that gap, right? We just filled the gap, finished, and now it's already bouncing back. So I mean, this could be a gap fill and an immediate bounce. But if you look at the daily RSI, we're oversold, right? We're sitting at 29 on the RSI. And if you go to the weekly, we are sitting at 29. I want to point this out. Microsoft on the weekly, all right, here it got to 30.1. That was the bottom of the terrace. This is the third time in history that Microsoft is oversold on the weekly. All right. The other 2 times was 2006 and the dot-com bubble, 2000. That's it. Microsoft has never been oversold on the weekly except for those 2 times and right now. So I see that as a massive green flag. Like, hey, you don't need to go full port, but I'm telling myself you can't go wrong picking up shares when you're oversold on the weekly. That is a cheat code in the stock market. When you are oversold on the weekly on a good company, that is a great buying opportunity. Also, you're at a really good support level, right? Kind of been bouncing here, and it held up really well here, and you're on a massive trend line from the 2022 lows. You've been holding this trend line, and we are retesting it pretty much right here. And it seems to be bouncing, right? Got to 392 at the lowest, which was exactly what I had my support drawn at, and we are bouncing off this trend line. So I think, is this the bottom? Have no idea. But it is a great time to pick up shares just in case. Yeah, it's a great time to pick up shares for me. So I picked up some shares. And Netflix is in a very similar boat, all right? Netflix oversold on the weekly, trading at 26, all right? Happened in the bear market. Then all the way back, you have to go back to 2011. So 2022, 2011. So what is that? Every 10 years? So, and right now. So, that's pretty crazy to me. Also, you're trading at a very decent support level around $82. Bounced off here and bounced off here. And it seems like we're kind of hopefully gaining some traction. We've had 10 red weeks in a row for Netflix. All right. And this is a decent support level where I would feel comfortable buying some shares. Also because we're oversold here. And like I said, it's only happened, 2 other times? 2022 and 2011. So when it's oversold in the weekly, you can't go wrong. But it has to be a good company. You can't be buying, Beyond Meat or something. Oh, it's oversold when they're going bankrupt. And then it's not going to work. But this definitely works for like Mag 7 stocks and 100 billion market cap plus. Excuse me. And Hood, I started buying at 100 because I kind of thought we would bounce there. I mean, 100's a very, decent level where people feel like is a good support. People like seeing stocks at 100 or right around that level, and we kind of just crashed right through. If you see the daily kind of crashing hard. But my next level was 67, and we're kind of just getting a dead cat bounce. We were at a 14 on the RSI daily. Extremely oversold. I knew a bounce was coming. I really wanted to buy calls yesterday. I was telling my friend, like, damn, I kind of don't want to miss this fat bounce. Totally did not buy calls. Missed out on the fat bounce. But, it is what it is. We're back to 30 on the RSI. So that bounce was well needed. Hood has been just jumping off a cliff. I feel really bad for all of its investors, dude, because that's brutal. It's kind of just because of the crypto thing as well. Like, Bitcoin's just been absolutely tanking since, October, kind of like when Hood peaked. Bitcoin peaked, and then Bitcoin sell off, Hood sell off. I really like Robinhood, but I hate how correlated it is to crypto, because I'm not a big crypto fan. I don't really believe in that crap at all. But I really like Robinhood, and that's why I'm kind of small in Robinhood, only like 6K, because I just don't like how correlated it is. Crypto is only 19% of their revenue. So Robinhood is a much bigger business than just crypto. But, it is what it is. I'm going to take advantage of some of these opportunities. I'm not going to go all in on it, but I'm definitely going to be scooping up some shares. Nevertheless. But yeah, dude, like the SPY. I mean, SPY is almost at all-time highs. We're $7 away from all-time highs. That's crazy. It feels like there's so much more blood in the market than us. It's just a rotation. It's just sector rotation. Tech's taking a beating. I mean, still not that far from all-time highs. FYI, this is a very possible double top, which can be scary. But yeah, I think we pretty much just sold off way too hard, way too fast, and we're seeing a dead cat bounce. But we'll see, Hopefully this is the bottom. I don't want to be a bear, but I also don't want to go all in when more buying opportunities could appear. But those are my favorite stocks right now. I really like Meta. Like, there was a really big gap right here. Meta gapped right back up and filled the gap and then started selling right back off. So that sucks. But also, Meta's been holding this insane trend line. Hold on, let me go. Look at this nasty trend line, bro. Meta bounced off of it right here in November and again in 2026, right before earnings. So very, very strong trend line. I think this is called the megaphone trend line or something like that. But if we break 600 and we break this trend line, I would be a little nervous. Unless, like, I'd be nervous. Maybe we see that 580 low. If we don't see 580, then I feel like we go down to 480. Like, it's very scary. So Meta definitely needs to hold 600 plus for sure, or Meta's gonna get a little ugly. But I'll just wrap the video up right here. Keep it hopefully not too long, but Yeah, drop some comments on which stocks you guys are looking at or which you're trying to scoop up some shares so I can check it out, because it's impossible for me to look at every single stock in the stock market. But stocks I like are profitable companies or companies that are going to turn profitable this year or like next year max. If it's any further than next year, I probably wouldn't really look at that stock, because if market does like correct 10-15%, the unprofitable stocks are going to get hit the hardest. But and tech, of course. But yeah, send me some stocks to look at, and I'm gonna check them out, see what you guys think. Also, right before I leave, this is the dollar. All right, this trend line has been going on since 2008. All right, when the dollar bottoms, stocks and gold and silver top. So it's inversed basically. If you noticed right here, the dollar bottomed right before the bear market, and this was 2022. The dollar rebounded, stocks crashed. So, and this was a tariff, but I mean, as you can see, it's just also something to look at. If the dollar starts to break down from this trend line, you can definitely expect to see stocks have an amazing year. But if this trend line respects, which it has been for 18 years, expect stocks to kind of stall, trade sideways, possibly trade down. They don't always go down, but it definitely could be like a sideways market, worst case or best case. But that's something to look at as well. But other than that, appreciate you guys watching the video. Peace.